about them earlier. Palantir down another 5%. There's a 31% sell off in that stock. You got Tesla down 37% from the highs. I mean, you've got some serious selling in momentum stocks. Take a look at CrowdStrike, right? Very exciting, kind of fun momentum stock, down 18+% so far and rising. I mean, you've got momentum here to the downside. TLT, the only thing, like I said, that is working well for me right now. My silver trade probably going to get stopped out, which is fine. VIX is spiking up 10% here today. I don't have a lot of U.S. equities, which I'm very grateful for right now, but still holding off. I don't have any Bitcoin. I don't have any Ethereum. So we'll see. I'm going to look for some opportunities. If I take any trades, I will share them inside of our Discord VIP group. Up next, we're going to have Chris Pulver take over the show, who also has a service within our Discord. You can see all of his trading signals and my trading signals. If that's something you're interested in, we'll drop a link here to chat directly to our support team. If you'd like to speak to us about getting set up with those signals, you can get notified anytime I take a trade. We've got a lot of movement in markets right now, and I imagine there will be some great opportunities if we can find them. If you want to see every trade I take directly to your phone, send us a direct message, and our support team will hook you up with access to a membership where you can see my trades or Chris Pulver's trades, who's going to take over the show just after this quick break. We'll be right back with Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. We have a little bit more of a slide in the markets. Here is what I'm looking at, a little bit bigger picture. So the last few weeks, I've got my, call condors looking good. Those are all profit. That's fine. I don't think I have that trade in any longer. That was closed out for profit back when we started to fade this late February move. Let me double check that. Anything in the 6,300s on the SPX. I did take, I used my collar position, which is a sell, call, buy, put, and micro strategy. I did end up closing out for like a $22 gain on the put side, but I reestablished another put, saved me about $5 net. I'm still holding a collar trade with a 310 covered call that's like $60 of credit, which is nice, but I'm going to just hang in there for a little bit, trying to protect the downside. Let's talk through this all today. As Nick just said, TLT is doing pretty well. TLT is up around $9,300. Dog's making some noise. TLT is looking good. I may end up getting some of my TLT called away. If it's in the money, then I'll probably roll it. Otherwise, I might just let it get called away because it's a $2,000 or $3,000 trade per account. So there's still plenty of upside here. I'm only about 14-15% of my max profit. So there's still plenty of profit to go. Time wise, I mean, I just need price to get up over 92. But if we're there and I can close it out for mostly my $27 credit, then I'm probably going to do that. So let's see here. I was looking at SPX into the 6,000s. So I do have call condor here. Let me have a quick peek at this account here. So Feb 28th, 1, 2, 3, 4. That trade is looking pretty good for profit. Let me check the numbers on this one. Okay, let me see if I can close this out for a 10-cent debit. That was an iron condor. Closed out for profit on the iron condor. And then March. Same thing here. 1, 2, 3, 4. That is an iron condor. Okay, those trades are still looking fine. Delta Y is still really solid. I'll hang in there a little bit longer on that one. 2, 3, 4. Anything else? March 31st. Yeah, Condor stuff looking pretty good. This one, 63.40. This one is the trade I was talking about. This is a call Condor, so 63.40 by 50. That's a $10 wide trap. And then I sold and sold. That came in for a net credit. See what this one's trading for right now. Yep, this one should be profitable. So I pulled in a couple of dollars on that. Let me add the math on that. So that was 63.40, 50, 64.20, and 64.45. Crunch the numbers. So minus 36.71, plus 34.19, plus 20.59, minus 17.06. Pulled in a dollar credit on that one with a trap. Right now, that dollar is trading for about 5 cents. See if I can just close this one down a little bit. So if I can close it out for like 5 or 10 cents, I'll just take the profit. We should be good. 2, 3, 4. All calls. All right. I'll manage that one in just a sec. I've got a covered call on Snapchat. Coca-Cola got called away last week. Hedges are looking good. So I put them on. That's the important thing. Timing wise was pretty decent. So E-mini hedges up around $2,100. E-mini hedge, different expiration, about $1,300. Micro E-mini hedge up around $5,500. I'm just going to let those go. Those are there to help protect me to additional sliding. If we get there, that would be on my E-mini side. So I put in the hedge up here near the all-time highs. So far, so good. That's the right direction. You know, how much do I have or what direction do I want to take them? Well, if they're coming down to like the 144, the 200 moving average, that is where I want the hedge to be taking profit. So if we flush lower, and I mean percentage wise, if we dropped another, let's say 3 to 5%, another 3 to 5%, I'm taking profit on those hedges. We're looking at like a 5,700. I think that's my sell side. This one. So this is a 56. Okay, that one's looking good. This one is same thing. This one is my hedge. I have a pure downside hedge. So my April 30th. Call side. So I've got 61.75, 63.75, and a 61.75 by 5,700 there. So I put the trade on for both. If I just look at the put side management, I've got 62 by 57.25, and I've got 61.75 by 5,700. Those would be the trades that be offering the most profit for right now. All right, so those are looking okay. All right, Japanese yen. Let's take a look at currency strength. I was looking at AAI sentiment, which we had a little bearish positioning as far as the sentiment goes. This is a contrarian play. I'm very curious how this is going to print this week. If more and more, if more and more investors are getting positioned bearish, if that's actually going to offer up a buying opportunity somewhere in here. I don't know how aggressive the bulls are going to be. If they're going to step in, it should be there's a little gap right here around 590 to 585. This is SPX or SPY. So SPX around the 5900 to 5860 zone. The SPY around the 590 to 585 zone. If we gets a little nastier out there, this is, we don't know. I mean, obviously the market is sliding for 3 days in a row now. But if we pick up a little bid right in this first gap, that'll be interesting. If we don't, then I'm looking for equal high, equal low. If we measure this move, this is where things get a little gnarly. If we go high to low, and it breaks that low, that measure move gets me to this outer area. So this would be, support and support. We could potentially be looking 550 to 540 zone, which would feel pretty terrible. Straight up, like it'd feel terrible to see this market within, let's say, a month, flushes from all-time highs down to about 8, 9, 10%. So where does that get us? If we come down to like 550, that's a 10.5% correction on the S&P. That's a pretty big one. Anything in that 10 to, let's say, 12% zone, I'm going to be hopefully just deploying some cash in here and positioning kind of little bites. And if we catch a, close below, close above, that might help put in a little bit of a bottom. We'll see if the market's eager enough to buy the dip. Okay. So the nice thing is having cash on the sidelines, being somewhat diversified. Bitcoin's not looking great. Bitcoin broke some pretty good support. I'm around that 91,000 mark. And, there's two levels I talked about. If we break 91, okay, look out below. And then the next level would be around the 75. So we're breaking structure. We're breaking support here. There is a potential bounce off the 200 moving average. But if we don't see an aggressive candle pushing this thing right back above this 91K mark, that's going to be my outlook on Bitcoin. If we don't close back above 91K, this thing still has some pressure to the downside. I would be looking left on this chart. Previous highs around 74,000. Okay. So we're definitely seeing some tightening in the markets. We're seeing some flows that are favoring risk off right now. Bonds are looking pretty darn good. Does this help yields go lower? A little bit, right? Yields are dramatically lower. That's actually pretty helpful to see that, yields are down 11% from these recent highs. That's helping our longer term bond prices quite a bit. My call side is 92. I did a roll on this for 92. Let me double check my TLT. 92 sell call for 15 cents, so 21.17. I have to update this in my chart. So this is a 331 rolled to 430. Okay, so I got a 430 rolled to 430, expiration 92, sell call, break even 21.17 debit, where the price would be 86.17. So if 86.17 is my price break even, 92 would be where it gets called away. That's just under $6. So 92 minus 86.17, 583. It's about $2,300 gain per account, which isn't bad. I've got 400 contracts, 200 contracts on a lot of these accounts. But part of me wants to be a little bit more bullish on bonds. I'm not. I think I'm just going to take this as a bit of a one-off. But yield-wise, like this is somewhat encouraging. I'm hoping that the yields will continue to fall. I'm going to set a chart alarm. Let's move it down here actually and see if this actually does some pretty impressive coming back. I don't know if we're going to get too much lower than 4%, but I certainly wouldn't mind seeing bonds go as low as possible. 4.15. I'll set a 4.20 chart alarm here. Sliding lower. Okay. So let's talk top down. Room to fall. It's pretty simple. NVIDIA has earnings tomorrow. I hate to say it, but the entire market's going to care. So NVIDIA tomorrow after market, we are sliding pretty hard. I thought NVIDIA realistically would be kind of hanging in there right before earnings. and kind of staying right in the middle between this high and this low. We're already seeing a lot of pre-market move where just flows are pushing prices lower. I'm not going to position for Nvidia. I think that if it's in the middle, we can go higher, we can go lower. It's a bit of a toss-up trade. Now the flows have come in for the last 3 days to follow suit. Look, it's pretty simple. Guess what stock's going to be down? Mags. Boom. You want to see what the market's selling off 3 days in a row? Mags. You have so much market cap in this between all of your, and you can throw in even 8 here. Like it doesn't include AVG or Broadcom, but basically your Mag 7 selling off for 3 days in a row, and that move, and this is going to be wild. I don't know if the percentage is going to be the same, but we have a drop of around 7% in the Mags. Okay, individual stocks, Apple's obviously barely dropping. Amazon down a decent amount. I've got to check on my puts actually to see how those are doing. That ratio spread, I might actually get a sign on this thing if it doesn't bounce off the 200 moving average. Google sliding a little bit lower. I mean, look, it just pressure's on, right? Apple's back up to the highs, but probably fading. This wouldn't surprise me if Apple hits resistance and comes back down into here, probably finding more support off this 200 moving average. Amazon sliding a decent amount off these highs. I still like Amazon longer term, but it's down about 15%. Google also off this quantum computing leap, and then we're coming down, about 15.5%. Meta, big drop from the highs. This is going to be profit for this week. Meta is also finally cooperating, down about 12.5% with a lot more room to go. I mean, if you want to look at dollar cost averaging on Meta, I'd like to scoop it up here around that 200 moving average to see if that trend stays intact. Microsoft also breaching a little bit of support, but we've got this 390 zone that could still hold up really nicely. Microsoft also is a ways from the all-time highs. Netflix cooperating from the highs, took that broke wing butterfly off, has some ratio spreads. Nvidia sliding, still has some good structure one way or the other, right? Highs up here, lows. I'd say major lows would be around, we'll say like the 110 to 100 zone. 110 to 100 for major lows, and then the 140 to 150 for major highs. I could see Nvidia also just staying in the middle, and the market's not quite sure where to go. Okay, we'll find out. Tesla down to 308, another fresh low on Tesla. I'm just going to continue to dollar cost average in. So a little bit of chunk there at 362, another one pending at 285. We do have the 200 moving average sitting right here. I wouldn't just call the falling knife here, just in case it keeps sliding. I could see 300. I could see 275. If there's a bounce zone, that's where I'd be looking for it. But just be careful on throwing money when it looks like prices are falling. Sometimes the best way to play it is you got to sacrifice some price precision in order to get proven right and get some confirmation of what you want to see. If you want to see something green on Nvidia, then you're clearly going to wait for something to turn, because right now it's all red. And right now, Mags is all red. And right now, the indexes are all red. Berkshire Hathaway had earnings, popped to all-time highs. This is, Warren Buffett, cash holder, net seller of stocks, cranking to all-time highs. I mean, I've got a ratio spread down here, which is working out pretty nicely. Bonds are doing well, like we said. Let's go gold, silver, oil, dollar index, risk on, risk off trading. Here's currency strength. Today, the Japanese yen getting stronger. That's helping my 6J FXY positions. Swiss getting stronger. That's not helping my Forex pairs. Dollar's weaker, CAD's weaker, Aussie, New Zealand's weaker. Interesting. But Japanese yen, Swiss, that's showing some risk off flows for the day. For right now. I'll revisit this in the week when this thing prints a new one for the 25th, I think, 26th. 26th, yeah. So we should be printing a new AAI sentiment on Wednesday. Forex Factory, I mean, nothing crazy. Consumer confidence was down a little bit. We got some Fed speakers today. We've got NVIDIA tomorrow. Like, none of this pops up in economic calendar. We have G20 meetings starting. Is that day 1 on Wednesday? How long do they go? Day 2. So they probably go for the rest of the week. We have GDP on Thursday for the U.S. post NVIDIA earnings. Got it. Futures-wise, catching a little bit of a bid. What is this blue line that I have? I put it on there for a reason. Support. There we go. Okay, that's where we're at. Okay. Let's go dollar, gold, silver, oil. We did Bitcoin briefly because it's below that 91K mark. Volatility one day is up a decent amount, or was rather, up from not, this would have been Friday. So big one day move in VIX on Friday. We're seeing the 30-day VIX up again. Okay. Look, this is an important spot for the VIX. And why is it important? Because one extra nudge higher spells a lot of pain ahead. And this is one thing that traders need to be ready for. Look, we don't go from 10 to 60. Okay. We go from 10 to 20 and then 20 to 40. That's the issue. That's the pain point. So right now with the VIX elevated, we're about to see how much these markets want to come in for dips. If the market's going to buy the dip, then this VIX probably taps out around like 20 to 22 and starts to fade. That would be a good thing. If you're looking for a buying opportunity, you want to see this VIX fade pretty hard. My concern is that we had two of these outlier events. Okay. This one was a weekend and this one was an FOMC day. So I don't really see, outside of NVIDIA being a major catalyst, I don't see the VIX necessarily having one of those wild and crazy days, which means we might be elevated, but still contained. Now, go back to 2022. 2022 pretty much looked like this the entire year. It wasn't a crazy outlier VIX, but it was a steady like 20 to 30 VIX the entire year until we finally turned in September, October 2022. So here is 2022. Most of that bear market was played between the 20 and 30 handle on VIX, right? And what did that look like in price? Well, flush down, rip up, flush down, rip up, flush down, rip up, flush down, built the bottom, based here, and then there's your 2022 recovery. But that was 8 or 9 months of that. Okay. So I don't think that's the new normal unless we're going to see just a monster deleveraging right now. But look, I mean, this right now looks like child's play. That was a lot more volatility in 2022. This is child's play. So unless we have a spike up here and we're kind of dancing around in this area, then maybe we're talking, corrections that are bear market worthy. Not yet though. All right, SVXY, anything here? Nope. If we get a big event in the VIX, then I'll probably end up buying and dabbling with some SVXY to sell that. That's this basically the being short VIX. To do that, I want to see some big extremes. Dollar index flushing down a little bit lower. I'm okay with that. This 106 to 105.50 zone. Oil, another drop on oil. Watch out for that floor. This is why I'm not doing anything on oil right now. I'm trying to stay out of it. Natural gas, still trying to get long. I am long on UNG. It's looking fine. Gold's finally making a decisive turn to the downside. We've only been saying this for the last couple months, just waiting for gold to give us a reasonable correction. Okay, why is gold dropping? I don't know. We can probably attach some type of news event to it or some why catalyst. Investors cash in, trade war persists. Cash in what? Cash in profits? Sure. I mean, gold's been up how much? Since the start of 2023. Okay. I mean, gold has essentially kept pace with the index. It's crazy. Like that's a very unusual performance for gold to actually keep pace or even outpace the S&P. So cashing in, yeah, maybe. To what degree? I mean, maybe cashing into this level, maybe cashing into some type of dynamic support, but I'd say cash in looking to still buy dips. I mean, if we have geopolitical concerns persisting, then I would still expect gold to maintain a bid. But if anybody's been actively looking for shorts on gold, well, today looks a little bit more encouraging. I'm not a bear on gold. I think that gold, if it sells off, it's just get to a level that looks more attractive, find some necessary dynamic support, and then start to rebuild. Right. So once we flush down, we start to rebuild, and then we get a trend. We start to rebuild, we get a trend. So if we can get this kind of cleanse or correction over with, then starting looking for correction, starting to look to close back above, and then stop losses, and then off you go. Revisit highs, get to all-time highs. Gold could really maintain a lot of bids. I mean, the fact that we are turning now and not getting to 3,000, I guess we'll see how much manipulation we have in price action. If we go down for the day and then go back to all-time highs, I think that is some games that gold is playing. We might be carving out more of a top. But I'm just going to wait. If gold pulls back, good. Pull back here. I'll pull back here, and I'll get long and establish some fresh longs. Okay, what else do we have? Silver's pulling back a little bit. GLD, fine. I can accept that. Let's go silver. Little pullback, still well supported at 29 and 26. SLV, the shares that I have. That was already for 2026. Diagonal spread, that's looking fine. That's out to 2027. Bitcoin at 86, right at the 200 moving average. We'll see if there's a bounce. I am going to put in a trade right now. We're at 49. I think there is, I've got some ratio spreads on here. I'm going to go, let's see here. I mean, there could probably be another $3, $4, $5 of movement to the downside. I'm going to put on a trade. Let me see something right now. I'm going to take a look at IBIT. And let me look at a trade that is, I've got a January 2026. I might just do it again. I might go to March of 2026. So if I were to do this trade right here, this offers me 58 cents to essentially take a at the money trade. That's not bad. I could do an at the money for 55 cents. There is potential assignment risk. Downside is maybe limited to a couple of dollars. I do have some ratio spreads. Let me double check and make sure I'm not looking at any assignment risk here. So I have a ratio spread 46 by 45. Okay, so I do have some exposure there to potentially have some assignment. 52 by 51, 52 by 51, 43 by 42. These are all credit spreads. And then this is a covered call on the shares that I have. Right now, my covered call is up around 97%. It's better off if I just take the profit and move on. I'm not going to get much out of this. I collected 293. I'm trading for 285. I might as well just close this out for profit and then add another call. So I'm going to collect. What was my profit there? So max profit on the call would be 293. I can close this down for me to wait an extra 24 days to make 9 cents doesn't make any sense. So I'll take the 293. I'll close it out for like 284 net. See if I can get this for 8 cents. Okay, 9 cents bid or 9 cents ask. Close for 9 cents. All right, I'm taking the income there. It's going to do this quick on these IBITs. So IBIT 67 call up about 97%. That's $2.92 credit. Take the 9 cents off. All right, I'm going to update this on IBIT. Okay. Just looking at my break evens for a sec. Adding a collar trade, which I have, the 67 by 40. All right, so I'm going to take the 67 off. The 40 is still not paying. It's not paying out. It was an out of the money. I'll just let that marinate in case we get a really nasty push to the downside. But I'm going to take a majority of that profit. Okay, let me just take the covered calls off real quick. So 67. Closing. Let me see what this would do if I did the 40 by 67. Close it out for 21 cents credits. So I can still take, that's actually lowering my cost base a little bit. That's actually fine. Protection. All right, let me debate that. So I can close out, reestablish another collar trade. March 21st isn't that far away. It's only 24 days out. So I think on this one, so I bought it for $1.03. All right, I'll do the math on that. So if I close down this, collar trade. All right, I could probably save this for offline, but basically what I'm going to do is I'm going to look to manage the collar trade for a net profit and then reestablish and create more time in the trade. I probably want to get this out another 40 to 60 days. And because I don't think there's going to be enough time to necessarily, unless we have like a nasty flush down, this $40 put is not really going to pay me what I want. So the call was fine. This is up, 97% of my profit. And the put is still slightly in the red, but it's enough to offset it by about a 22-cent net credit. So that does lower my cost basis a little bit, but I'd rather create a new collar 40 to 60 days out. And if I want to be more aggressive on the call side, I could just sell more premium, which may not be a bad thing. But if the reason I don't want to necessarily sell calls too aggressively is if Bitcoin does take a turn and it starts to rally, I don't want to get in the way of it. I'm looking at, like, if I'm going to get it called away, let's get it called away at recent all-time highs. Okay, so I got to play around with that a little bit. At the very least, let me see this one. Closing down, reestablishing another position. IBIT right here. Close for, see if I get 30 cents out of that. Bid price 28, let's try 29. Okay, 28 cents there. This one should be closing out for 28 cents. Good. This one I'm just going to close out the entire thing. So this collar trade should close out for a little profit. 21 cents. Okay. See if I can close that for 21 cents credit. 20 cents credit. Freaking turds, 19 cents. Let's go. There we go. Okay, so I'm closing the collar trade out for a net win. I'm going to reestablish a new collar. Close at 19. Fill, please. The mid is 21. I'm asking for 19 cents. Fill my bid price. All right, taking it down to 18. That's okay. 40 by 67. Try 19 again. Not interested. 18. Come on, dude. This is ridiculous. I'm below the bid price, not getting filled. Stupid, stupid. All right, 17. Taking it off the table for 17. 40, 67. Closed. 40 and 67. Okay. That one's good. This one has some shares. 40, 67. Fill the 18 cents. Okay, good. This one may take them as that's out. I may take the assignment on this one. 49 by 48, 50 by 51, ratio spread. Okay, that one might take some assignment. That's fine. That is a margin account. Should be good there. $45 put. Okay, so I want to take a quick peek at another collar trade on IBIT. So that's closed out. We're going to look at another collar trade. Let's go to How far out can I go? 51 days, 80 days to May. So I wouldn't mind getting it called away at recent highs above 60. I want to have some put protection. So anything in the 60s on the call side, and then finance that with a buy put, hopefully just a couple bucks lower. So let me see if I can go 60. So I can sell the 60 here. I go a little bit lower on the delta side. So like a 64 is a 20 delta. That's decent. That's quite a ways out of the money. I might just take it where it's like, give me $1. Give me $1 and change. If I can net $1, lower my cost basis. 64 is up there. We'd have to hit all-time highs on Bitcoin, which, could happen, but probably a little bit of a tall order right now. So 64 is a 20 delta. Can I finance that? The put side is just pretty expensive. So I could grab a little credit here. Going out far enough. Maybe a 40. Fudge muffin. That's an 8 delta. Man, those are so low. There's enough time. If prices keeps falling, then that increases a little bit in profit, but that's really not the play. At this point, let's see. How much lower do we go? Maybe down to like $42, $43. If I'm more aggressive on the premium selling, let me see here. Maybe I go less time. If I go out 24 to 30 days, let's go out to the end of March. It's out 31 days. Are we going to hit fresh highs? $56, or I want it called away at highs. If we're going to call away, get it called away at highs. So I'll just do this. I'm going to put in just a call trade. April, right at $60. May, out a little bit farther. And I can go all the way up to like 65 or 66, grab another $1 out of this. Okay, $60. I'll take 62 for $1.52. All right, I'm going to do that. So IBIT looking for a May 16. $62 covered call for $1.50 or more. So that brings the cost basis down by $1.50. See if I can sneak in a couple pennies. Maybe be generous here. Come on, IBIT. Of course not. $1.52. Got filled at $1.52. Okay, that's fine. All right. Next up, adding a covered call here. That's the $62 for May. 62 for May. 400 shares. $1.52. Filled $1.52. 200 shares. 62. Okay, 200 shares. $1.52, hopefully. Filled. Get my trade size correct, 400 shares. $1.52, hopefully. No problem. All right, the cover call is getting filled. That's pretty good. This one, some ownership, 200 shares. 7634. $1.51 hopefully. Filled. All right, this will just take a second. 62. 200 shares. $1.50. Filled. All right. Couple more. Filled at $1.50. No exposure there. This one should have 400 shares, 300 shares. Okay, 62. 300 shares. $1.50. Filled. No shares. No shares. No shares. This one has 200. There we go. Got it. Okay. That should be everybody right there. Okay. So adding in updating my break evens. Close collar at 22 cents credit. Added May 16 expiration, 62. Sell call for $1.50 credit. All right, that's it. Thanks for giving me that time. Here we go. Micro strategy, either a bounce off the 200 or a flush down to the previous highs at 200. Hopefully the stock just doesn't turn to absolute trash. Momentum stocks are clearly losing. I want to see if there's a better gauge for, I mean, we're still like 50-50 on how many stocks are staying above their 50-period moving average. So between Nasdaq above the 50-day, it's about 60% of stocks. All right. Interesting little snippet. Watching the RSP. I marked a vertical line here, and this is 90 days for equal weight all-time highs. So I listened to an interesting podcast session yesterday. 314 Research is Warren Pies. He was on excess returns. I think it was just a replay of like some of the tidbits he had mentioned in the last couple months. But a fact that I thought was interesting was if the S&P market cap weighted makes an all-time high, which we did here, and we did here, and we did here, right? We've had 3 all-time highs back in December before the Fed. We had one, when the market was a little bit bearish on the AAII, and it was kind of a contrarian play, poked an all-time high again. This was mostly led by Mag 7 and market cap, not really broad, but that was the 24th of January, and then another poke right here on the 19th of February. Here's what this snippet is. If we make an all-time high in the SPY within 90 days, we should be looking to make all-time highs in the equal weight if you want to see a healthier, broader bull rally. Okay. So the reason I'm watching this closely is because from this all-time high in equal weight, if we go out 90 days, which is this vertical line, if we are not at these highs, then we are sitting here having this conversation about how this market is not super, market breadth-wise, it's struggling, right? So my point is, If we're going to be fading off these highs on the market cap weighted led by Mag 7, look, this is the chance for Mag 7 to drop and the chance for the market 493 stocks to pick up the slack. If in any way, shape, or form this is going to be a positive thing, well, now's the time to show your strength for 493 stocks. Because if that happens, this instrument will show some resiliency and possibly get back to the highs. Okay, or at the very least, not suck as bad. So if we go high, low, and if we go to symmetry, then yes, we can make a lower. I still like buying this. In fact, I like buying a lot of equal weighted this year because I want to get rid of some of the concentration. If we go high, low, lower, high, lower, low, I'm probably buying some more around that 170 handle. And if we get back to the highs, that's a pretty good rally. I mean, for an index, that's a decent dip in my opinion. That would be 11+% to the upside, timing that. The SPY may outperform, maybe not, but I think if we actually broaden out, I'd almost rather take my chances with equal weight than be in the concentrated Mag 7. But point is, if we want to see a healthy bull market, we should be seeing this thing revisit highs from the all-time highs. We should be making fresh highs within 90 days. So from there to there within 90 days, or if you go back to the S&P, we should be seeing all-time highs within what's 90 days of this. Within 90 days of this, Amazon at 205. Okay. Whew. All right. Things are getting interesting. So 200 by 195 ratio spread for March. I mean, there's time. This is just pretty healthy sell-off. We're going to see what these 200 moving averages are made of. And this is the good and the bad. The good is like, well, I'm waiting for a pullback. I'm waiting for a pullback. Let's start positioning this way. And, I'm positioning for pullbacks. We just, you just never know how nasty this thing is going to get, right? Last time we had this test of the 200 moving average, it tested all the way through it and then took, maybe 10, 12 candles to get above it. So we could have a flush down to the 200 moving average, get back above it. That's a good sign that the bulls are still showing some interest. But yeah, I mean, if you're trading anything risk off, that is certainly helping. Probably my best trades right now, risk off, would be I'm hedged on ES, I'm hedged on MES, and it's multiple. So I have 2 hedges running here, and I have 1 trade and 1 hedge running here. I'm not long VIX or anything, but I will be watching SVXY. I'm still hedged with Japanese yen with FXY, which should be up. We're at some fresh highs today in FXY, so that's helping with Japanese yen. 6J is Japanese yen futures. The rest is just kind of hanging in there, watching my levels, setting a bunch of chart alarms, and looking to see how price behaves. So, all right. Look, and I think it's wild that it's going to be so dependent on NVIDIA, but it probably is. Nobody knows what's going to happen this week. NVIDIA earnings are expected to be slightly higher, right? So their trend has been up. Their earnings per share is forecasted to be a little bit higher than it was before. This is 75 estimated, and right now they're estimated at 84. So another jump in EPS and another jump in revenue from 33 billion up to 38 billion. What's forward guidance on NVIDIA? I don't know. Maybe good, maybe bad. Technically speaking, this would be a really important trend line to hold. Not only the dynamic moving averages, but also the 200 moving average sitting right there, the previous lows, and this hand-drawn trend line just connecting these recent pushes. So, I mean, I don't know. If NVIDIA breaks down, man, you want to see that thing be a fake out. Because if NVIDIA breaks down at a 3, whatever, this was 3.3 yesterday. Now it's 3.09. Like, we are shedding hundreds of billions of dollars in market cap. Every time this thing is down by, 3, 4, 5%, we're shedding hundreds of billions of dollars in market cap. So that could be the big story. It's like, well, we had a great run for NVIDIA, and now we have a 30, 40, 50% correction. It is going to weigh hard on the overall markets. However, earnings growth has been pretty solid. Earnings momentum has been pretty solid. My concern is that this thing is priced to perfection. The fair market value is nowhere near $150. So here's NVIDIA earnings tomorrow after market, and we'll see if the market can just hang in there and not puke on itself. Insider selling, that's not a surprise. Price to earnings, price to sales, price to earnings ratio is pretty darn high. Current price 130, fair value 100. I do think for a play, it's like tech stocks are always bought at a premium, but we're going to see what this premium is made of. Because if 100 gets hit, I would hope there's buying interest. If we come down and hit 100, I'm hoping we're coming back to 150, and maybe this is just a big range trade. But this is why I'm not a stock picker this year. I'm trading a lot of options. I don't really want to own a lot of stocks, and the part of the reason why is like, look, the index might be down 7%, might be down 10%, but an individual stock could be down 20, 30, 40%. That's not the volatility that I want to deal with in my portfolio this year. Okay. So I will probably stick to the indexes as much as I possibly can. Nvidia Wednesday after market's going to be a huge influence on where this thing goes. Can Nvidia save the market in the near term? Maybe. It's right at the 200 moving average. Possibly it holds right there. Would I get bullish on Nvidia? Not necessarily. If it goes up, that's fine, but we probably still have some type of like wedge. Maybe price just has to prove it. Maybe give a little bit more time. To be determined. I'm not really going to make a decision. I do have a bunch of puts and ratio spreads like the 115 by 110, but sold a bunch of like $75 and $80 puts. Hopefully those aren't going to come back and bite me like, well, we're talking about Nvidia now at $70. It should be a good thing to own. Maybe it is, maybe it isn't. When the market wants to let go of something and get rid of momentum and growth stocks and go into utilities and go into industrials and go into consumer defensives, like that's not great. This is what 2022 started like. It was November 2021 when the market peaked in tech, right? Your Nasdaq peaked in November of 2021. Here, there's your November peak. So if we're going to get like a massive deleveraging, now understand that the interest rate environment was different, right? So the Fed's raising rates and the market didn't like it. So the reality was, tightening. Fed's raising rates. It's not good for growth. And we had a legit bear market. So kind of different now. The Fed is, pausing/cutting. Market's still anticipating 1 or 2 cuts this year. The Fed tool's changing all the time, which is kind of annoying. But we're still way above these all-time highs. So I would say, though, just throwing it out there, if this market gets really silly, that would be a spot I'd be looking for. If it's not enough to come back to the 200 moving average and bounce, or it's not enough to come back to this structure here and bounce, then previous all-time highs back in 2021, that's a healthy correction. So that would be unpleasant for most traders to experience a 25% pullback. On an index, you're going to see stocks that are down probably 40, 50, 60+%. So that could be pretty painful. I don't think that's the environment we're about to see, but what feels like 3 aggressive bearish selling days, we're finding some dynamic support, but it's really all about stupid Nvidia on Wednesday. And we'll see if the market can show some resiliency. If not, look out below, aggressively watch your levels. I like this 200 moving average a ton, but man, this is, I don't know, it's a bit of a falling knife. And we'll see if it continues to stay with that pattern, or we start to see the bulls show up a little bit. So, all right, I'm going to go. I've got class coming up in about 15 minutes. So, little top down. Look, buckle up. We said there's going to be volatility. We expected pullbacks. We're getting them. Now we, be careful what you wish for, because sometimes it's not as pleasant when it's like, well, it is pulling back and it's pulling back faster. Now my option prices are all jacked up. I'm taking on some heat. I'm down another 1% today. Started out really solid, giving back a couple of gains on Friday and today. So it's not awful, but I'm watching my levels carefully, watching my monitoring all my prices, making sure my lines in the sand are safe. Probably have a lot of these trades out like 30 to 60 days. So I'll keep watching, but I got some time. All right, thanks. I will see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.